Hello and welcome back to Investing for Generations, your channel for high quality stock research for long-term value investors. Today, as every weekend, I want to give you my weekly update on my real money portfolio for week 29 of 2021. And overall, my portfolio have a performance of almost 65% since the start at the 2nd of December 2019, which is an outperformance to the S&P 500 of around 24% and to the Dow Jones of around 40%. And in this video, I want to talk about the topics of last week. First of all, the Q2 earnings of some of my companies, the transactions I did, the dividends, and the performance overall. So let's start with that. Before we start, don't forget to subscribe and ring the notification bell to never miss another video. And then we will see 1 or 2 times a week with stock analysis and every weekend with my weekly update on this real money portfolio. So last week, the Q2 earnings season just goes on. And first of all, Intel reported their Q2 earnings. I made another video about that today with a deeper insight to this numbers. So you find this here up on the screen or down in the description below. If you want to know more about the Intel numbers and what I really think about it, just watch this video. Here I just want to give you a short overview. Intel reported 18.5 billion of revenue, which is 2% up year over year, a gross margin of 59.2%, which is also up 2.9 percentage points year over year, and an earnings per share of $1.28, which is up 12% year over year. And with that, they beat the analyst estimates. For the outlook for the full year 2021, they said they will come out at 73.5 billion in revenue, which would be up 1% year over year, a gross margin which slowed down 2.9 percentage points year over year to 56.5%, and an earnings per share of $4.80, which would be a down of 6% year over year. Free cash flow is estimated 11 billion. And this outlook, especially the down in the gross margin, the market don't like at all. On Friday, Intel just declined over 6% to currently $53 a share. And since April, the stock price declined over 20%. Which leads us now to a P ratio of 11.9 and a dividend yield of 2.62%. So overall, they beat the estimates. The outlook is weak. But as I said in my other video about Intel, I go a little bit deeper into these numbers. Then Coca Cola also reported their earnings. And Coca Cola tops Q2 earnings and sales estimates and raises the view. Coca Cola has delivered second quarter 2021 results wherein earnings and sales beat the Zacks consensus estimate and improved year over year. Comparable earnings of 68 cents per share beat the Zacks consensus estimate of 57 cents and improved 61% from the year ago period. Revenue also surpassed the Zacks consensus estimate and improved 42% year over year. Organic revenues rose 37% from the prior year quarter. And also the guidance is positive. Tough uncertainties related to the coronavirus pandemic remain. The company raised the organic revenue and comparable earnings per share EPS growth guidance for 2021. It now estimates organic revenue growth of 12 to 14% for 2021 compared with high single-digit growth mentioned earlier. It now estimates comparable EPS growth of 13 to 15% year over year versus a growth rate of high single to low double digits stated earlier. The company delivered comparable EPS of $1.95 in 2020. And so overall, very good numbers from Coca Cola, a little bit surprising good numbers. Also the guidance is good. And so the stock price of Coca Cola just rises to currently $57.01 and is close to an all-time high. And this leads to a PE ratio of over 30 and a dividend yield of 2.95%. Doesn't look so cheap anymore. Then take a look at my transactions. And of course, I used the dip in Intel and added 28 more shares for $53. You see here on the chart all the green dots are the times when I bought my shares. And so now I have 169 shares of Intel for a purchase price in average of $51.88, which leads to 3.4% of performance right now. And I'm quite happy with my Intel position. We will see where this leads, but Intel is still a cash cow with a very good market position, even if they lose some market shares to AMD. And so I will just stick with Intel for the long term. Then, because also the China stocks just crashed lately, and I made also a video about that 2 days ago. You find a link here up on the screen. I added 4 more shares of Alibaba for $204.37. And so now I own 36 shares of Alibaba with a purchase value of $8,035 or a purchase price in average of $223, and I'm down 7.48%. But also here Alibaba is a great business, and of course there are big issues especially with the Communist Party in China, but in the long run I think everything will be fine with Alibaba, and right now it's really could be really a good time to invest for reasonable prices into a great company. And almost just the same with my second China stock, Tencent. I added 15 more stocks for $66.52, and so now I own 94 shares of Tencent for a purchase average price of $74.16, which leads to a performance of minus 9.7% right now. But just same story like Alibaba, Tencent is a great business, a great company, and I'm very sure they will go stronger out of that. And sooner or later, the sentiment for China stocks also will be more positive, and then the stock price will just follow. Then take a look at the dividends, and there is nothing to say this week because there's no dividends received last week. So we can jump to the performance. And here, first of all, look at all the stocks in my portfolio. Facebook, the best performing stock right now with almost 90%, Imperial Oil with 83%, and so on. And as I said, the China stocks in the minus, MI Homes also in the minus. Overall, I'm very happy with all the positions in my portfolio. And of course, with Coca Cola, which is up 50%, at some point, of course, I also have to think about maybe to sell because it's really not that cheap anymore. And so we will see where this leads. Right now, no reason to do anything. Just stick with it at this moment. Here we have just the whole pie of my portfolio, and you see there is still a big chunk of cash with 27%. And Intel is still the biggest position in my portfolio with 7.35%, and Tencent and Alibaba together a little bit over 11%. So also there is a stake in the Chinese market. And then for all the new viewers here on the channel, I also want to give you a view on all the closed trades since the start of this portfolio. And here you see all the closed trades. So I gained 104% with Caterpillar, 81% with Walt Disney, Stamps 79%, and so on. The only trade which was closed in the minus was the AT&T trade with minus 3.61%. So if you're new to my channel, just that you know where the following performance comes from. And so as I started the video, I want to finish it. Since the start of the 2nd of December, my portfolio just gained almost 65%, which is quite an outperformance to the S&P 500 and even more to the Dow Jones. And if you like the whole idea of long-term value investing, then please subscribe to my channel, ring the notification bell to never miss another video. And then we will see the next time with another analysis of another stock, and every weekend with a review of my real money portfolio. Thanks for watching today. I hope you liked it. See you the next time. Take care. Bye bye.